Did you know that a simple change in how you are paid could save you thousands in tax? In this video, I'm going to explain how both employees and employers can save tax using salary sacrifice scheme, whether salary sacrifice scheme is good for everyone, and the downsides of using the salary sacrifice scheme. Please stay around and don't skip any part of this video, because every information in this video can save you thousands in tax. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. On this channel, we cover topics around legal ways you can use to reduce your tax, how to manage your finances in a way that will help you keep more of your hard-earned money in your pocket, and accounting issues in general. In this video, I will not be providing any kind of advice. For personal tailored advice, please contact us or speak to your advisor or an accountant. Let's explore what a salary sacrifice is. A salary sacrifice basically is exchanging part of your salary for a non-cash benefit. Some of the non-cash benefits are pension, cycle to work scheme, workplace nurseries. You can use salary sacrifice scheme to buy equipment such as computers for work and many more. So these are some of the non-cash benefits you can exchange part of your salaries for. How does a salary sacrifice work? Basically, the amount you exchange will reduce your gross salary. And so because your gross salary is reduced, your taxable income will also be reduced, leading to a reduction in tax and NI for both you and the employer. For the employer part, the national insurance that the employer pays on your pay will be reduced because of the sacrificed amount. Let's see this using an example. This is Aaron. Aaron has a salary of £38,000 per year gross. Aaron joined his employer's auto-enrollment scheme. So Aaron is contributing 5% into his pension pot. And the employer is also contributing 3% into his pension pot. Let's see Aaron's situation before he joined salary sacrifice. His monthly salary is £3,166.67. And as I said, his annual salary is £38,000 gross. From this, he contributes pension on a monthly basis of £132.33. And on an annual basis, this is going to be £1,588. This is according to the type of pension scheme that he has. Aaron is entitled to his personal allowance because Aaron is a basic rate taxpayer. Aaron's annual salary is within the basic rate tax band, which is up to $50,270. And so Aaron is entitled to the full personal allowance. And so on a monthly basis, £1,047.50 will be deducted from the gross income. And on an annual basis, he will be entitled to the full one, which is $12,570 for the tax year we are considering, which is 2024-2025. And so Aaron's taxable income on a monthly basis is £1,986.83. And on an annual basis, his taxable income is £23,842. On this taxable income, Aaron will pay a monthly tax of £397.37. And on an annual basis, he will pay £4,768.40. And on this again, he will pay Class 1 National Insurance on a monthly basis of £169.53. And on an annual basis of £2,034.40. So this is Aaron's situation before he joined the salary sacrifice scheme. Let's see his employer. Aaron's employer will also pay employer's national insurance on his pay. And so on a monthly basis, the employer will pay £332.40. And on an annual basis, the employer will pay £3,988.80. And so this is Aaron's situation under auto-enrollment scheme and his employer's situation under auto-enrollment scheme. Let's consider when he decided to opt in for salary sacrifice instead of auto-enrollment scheme. Let's consider the tax that Aaron will pay, the national insurance that Aaron will pay, and again, if the employer's national insurance will also reduce when Aaron opted for salary sacrifice instead of auto-enrollment. Under salary sacrifice, Aaron sacrificed £1,900 per annum. So on an annual basis, this is the amount that Aaron decided to put into his pension scheme. So remember, salary sacrifice means sacrificing a part of your salary for a non-cash benefit. And here, the non-cash benefit that Aaron has decided to take up is pension. And so he has decided to put $1,900 on an annual basis into his pension. And because he decided to put $1,900, this is a contract that he needs to sign with the employer. The employer will send $1,900 straight into his pension pot on an annual basis. And so his gross salary will be reduced by this amount. Because of that, you will notice that his taxable income under salary sacrifice scheme is far less compared to auto-enrollment scheme. So look at his taxable income. Here, his taxable income has reduced to £1,960.83 on a monthly basis. On an annual basis, taxable income has reduced to £23,530. And because the taxable income has reduced, the tax will also be reduced, the national insurance will be reduced, and on top of that, his employer's national insurance will also go down. Let's see. So the tax is now £392.17 compared with £397.37. Again, his annual tax has reduced to £4,706 and compared to £4,768.40. You will see the difference a little bit later on. His national insurance has also reduced. As you can see, on a monthly basis, he will be paying £156.87 instead of £169.53 under auto-enrollment. On an annual basis, he will be paying £1,882.40 instead of £2,034.40 under auto-enrollment. So this is how low his tax and NI has been reduced to because of salary sacrifice. Let's see his employer. His employer will also have a reduced amount of national insurance, which is on a monthly basis £304.75 compared to £332.40. On an annual basis, the employer's national insurance will be £3,657 instead of £3,988.80. See the NI savings that the employer will make on just Aaron. Let's see the differences that the salary sacrifice scheme has made. Aaron's total tax and national insurance that he will save per annum is £214.40. But remember, don't just see this figure. Aaron is also receiving $1,900 into his pension pot. If you add this to this figure, that is a massive amount of savings. He is benefiting from pension, and in addition, he is receiving a reduction to his tax and national insurance. Again, his employer is also seeing the benefit in the employer's national insurance. The employer's national insurance on an annual basis has gone down by £331.80. This is the national insurance savings that the employer is also making. And so this goes to show that salary sacrifice scheme is good for tax and NI reduction. This is what I wanted to show you as an example for you to see a bigger picture. From the example, you will notice that salary sacrifice scheme helps you to reduce the amount of tax and national insurance that you pay. It also helps the employer reduce the amount of national insurance that they pay. Another benefit for the salary sacrifice scheme is around tax-free childcare benefit. If you are an individual who is entitled to tax-free childcare, as soon as your adjusted net income exceeds £100,000, you will no more be entitled to the tax-free childcare amount. And so, the use of salary sacrifice scheme can help reduce your adjusted net income to be below 100,000 to help you to be still entitled to the tax-free childcare. Now let's consider if salary sacrifice scheme is good for everyone. But before we do, if you have found any value so far, please send us a signal by hitting on the like button. And don't forget to subscribe to our channel if you want to save more tax legally, if you want to keep more of your hard-earned money in your pocket. Right, is salary sacrifice scheme good for everyone? The answer is no. The first reason is if you are an individual with a low earnings and you join the salary sacrifice scheme, if the salary sacrificed amount reduces your earnings to be below the lower earnings limit for national insurance, which is currently £123, you will lose your entitlement to national insurance credit. The national insurance credit counts towards your qualifying years for state pension. And so you don't want to lose it and you need to check. The second reason why salary sacrifice scheme is not good for everyone is if you are an employer, you need to check that the amount each employee sacrificed will not take their earnings to be below the national minimum wage. This is something that is extremely important. And so basically, if you are a low earner, you need to be careful when you are joining the salary sacrifice scheme. So now let's consider the downsides of joining the salary sacrifice scheme. The first downside is the salary sacrifice scheme may affect the amount that you can borrow for a mortgage. This is because the sacrificed amount reduces your gross pay. And so if your income is less, it affects the amount that you can borrow for a mortgage. The second downside is the salary sacrifice may affect your entitlement to some benefits such as statutory maternity pay. And so you need to check this before you join any salary sacrifice scheme. And the final downside of salary sacrifice scheme that I'll consider in this video is surrounding life cover. If your employer provides you a life cover, then the amount of life cover that you will get may be affected by the salary sacrifice scheme. And so with all these disadvantages and downsides, it's extremely important to speak to your employer to see if you are entitled to any salary sacrifice scheme and if it's going to be beneficial for you. I hope you have found this video useful. Please subscribe to our channel and don't forget to hit on the notification bell so that anytime we upload a video, you'll be the first to be notified. Please share your questions and comments in the comment section. Thank you for watching. See you soon.